Okay. We are live, everyone. Welcome to Hijinks and High Tea, or as it's more commonly known, the weekly crypto recap show, where I just like to drink tea and invite people on for some hijinks. So there we go. I have some really exciting people joining me today. One of them actually only just decided to hop on half an hour ago due to the fact that I tweeted out the topics, and he's like, oh, I have some personal experience with that. So really, really excited to welcome back Chris, or otherwise known as Zaphoid. You'll know him from Smart Cash. We have Joe Smackman, who is from Digibyte, and is going to be chiming in about some things going on with Binance at the moment. We have Craig McGregor from Navcoin. Welcome, guys.
Hey.
Hey, how's it going this week?
Awesome to have you. So lots going on in the news. Do you want to just, like, because I got a couple of new people, just go through each one of you and just give a sentence about what you're involved with, starting with you, Chris?
As some of you may already know, I'm Chris Carabats, also known as Zaphoid on Telegram and Twitter and everywhere else. I'm with Smart Cash, a cryptocurrency focused on bringing the currency back into crypto.
Awesome. All right, when you want to go, Craig?
Yeah, sure. Sorry. Yeah. So my name's Craig McGregor. I'm one of the co-founders of Navcoin. We're a proof-of-stake cryptocurrency that's been around since 2014, and we're focused on simplifying cryptocurrency and making it kind of fast, cheap, and easy to transfer money. Yeah.
Awesome. And Joe?
Yeah. So I'm Joe, also known as Chilling Silence. I'm not from Digibyte because we're quite a sort of a decentralized community, but I mostly talk about Digibyte things.
Awesome. Well, we've got a lot of other things to be talking about today, so let's go straight into it, talking about news that happened this week. Let's start off with Forbes. So we all know about that media giant. Apparently, they've just partnered with Civil to publish content on the blockchain. So that's kind of interesting. Obviously, we've had content creators and media outlets publishing to the blockchain for a long time now, and Forbes is just kind of jumping in the game now. But I'm really happy that they're exploring this territory. I think that, I mean, if what I understand from it is correct, they want to be rewarding contributors, rewarding readers, using cryptocurrency and blockchain tech to enable that. So any thoughts about that? Do we like that? Do we hate that?
Well, I like the idea of publishing more to the blockchain, particularly in the media side of things, because there's been so many examples of companies, like BBC or CNN, whoever, posting articles and then changing them without notifying anybody what they changed or how they changed it.
Yeah, that sort of accountability is interesting, right? Because New York Times get things wrong every single day. I mean, they just publish like pages and pages and pages of corrections, but they're all posted on some like back alley, can't really get there through a direct link kind of page. No one can ever find them. So it is like, they do correct themselves, and that's great, but if they've given people false information to start off with, and people just kind of continue thinking that that information was correct, that can be a problem. So what you're saying, I mean, that accountability is kind of interesting.
Well, there's a bit of a problem with that, though. From what I understand, they're only going to be publishing the metadata to the blockchain. So the actual content of the article is not going to be immutable on the blockchain. So it's going to provide, proof that something happened. And I think that's one of the things that blockchains are really good for, but you don't want to store megabytes and megabytes of actual content and images or anything like that on a blockchain, obviously, right?
Crypto kitties. I mean, what?
Wait, so they're just going to have like the hash kind of thing stored on, they're not actually going to keep like the plaintext document in there in any way?
Yeah, it's just going to be metadata.
Yeah.
Well, because I was going to say, like, that's going to contribute to the anxiety levels of the journalists and the publishers before they go and they put an article up, right? And they're like, well, I've got to make sure it's perfect before it's on there. But if no one's going to know, all they're going to know is this is changed. This is, it's not the original.
I mean, which is
really
good
a big deal
in some cases. I mean, knowing that it has changed covers people who respond to the initial article, and then when New York Times changes it, now those independent media folks look like idiots because they're responding to something that isn't there anymore. Just having that record of a change is at least an improvement.
Yeah,
that's true. I like that. I like that there is some sort of a record that can't be changed, especially like as things continue in media, like I don't know. I do worry about the state of media and journalism at the moment, and the internet. I mean, back in the day when you had physical papers, there's always the chance that you could archive those. It kind of exists, but people are raising their digital footprint and getting rid of like digital articles, making small tweaks that no one really knows about. Like it's easy to make tweaks in a digital platform than it is on a paper platform, right? And so it's just, I don't know, it is interesting seeing that transition over into the blockchain world.
Did you look into the underlying civil platform that this is getting published on?
No, do you want to tell us about it?
Yeah, well, it's essentially runs on an ERC20 token that's based, running on top of Ethereum. One of the interesting things that I thought that they introduced was kind of like a staking mechanism, where content gets published to these sort of newsrooms which get set up. They're kind of like a group or like a publication, and people vote which ones are acting legitimately in the space, basically. So you can use your tokens to vote for newsrooms, and ones which don't have enough votes effectively can't publish content to. So it's a way for the people to sort of control which news they get put in front of them, which is a bit of a double-edged sword, but I think that's a really interesting concept as well.
Does that make anyone else uneasy, this whole idea of like mob rule in terms of like facts? I mean, facts can't be determined as factual or infactual by the number of votes they get. So it is kind of disconcerting that...
I don't know, Reddit might have something to say about that.
Yeah, they do a great job at rewriting history there. But it is, I mean, it does make me uneasy. I hate the idea of mob rule with journalism because we've just seen so much of it. And the idea that a vocal, loud people can silence things that they don't like. I dislike this whole echo chamber culture that we've created. I dislike this whole censorship culture that we've created. I really like reading things that I disagree with. I really like seeing things that I don't like and talking to people that I don't like, because you never know if they're going to open your mind or tell you something you haven't thought about. So the idea that you can censor the things around you and keep yourself in this bubble, I think is problematic.
Didn't Facebook run into problems back in the day with that? Like, because they had too much of that. There was too much of it. And so basically, because you would like something and they would show you different things like on your feed based on what you liked, all of a sudden now all you see is basically like cute cat pictures and stuff like that because you liked one photo. And so they had to go and change their algorithm because it was too much, like you say, of that echo chamber. That's
the one thing about Facebook I do like, is that my feed now is just cute cats and my life is a lot happier for it. So
bad example by me.
The balkanization of social media is probably inevitable at this point. People are going to be attracted to what they like, where they like it, and they're going to gravitate towards the things that make them feel good, which are not things that challenge them. I don't see Facebook being replaced by some other monolithic social media entity. I see Facebook being replaced by 50 different social media entities that all end up being, well, this is where you go for the furries, and this is where you go for the left-wing anarchists, and that's where you go for the anarcho-anarchists. And this
you can't have the anarcho-syndicalists talking to the anarcho-capitalists. That would be terrible. They disagree.
You might have some tankies in there talking to some Leninists, and it just wouldn't work out.
They might talk in all caps. We can't have that.
So yeah, the idea of voting on what's truthful, I mean, I see that, like, I understand the idea of it, that, I mean, perhaps it could work. I don't know. I've never seen it play out. I do see it being co-opted very easily, though. So that does worry me.
Yeah.
Agreed completely.
All right, let's move on to our next topic. We're going to be talking about Binance. So everyone's favorite place. So Binance to disclose crypto listing fees and donate 100% to charity. Basically, they've copped a lot of flack recently because people have been saying, oh, well, they charge exorbitant fees. They list any coin that pays them. It sort of belies this idea that they're this corrupt exchange, that it's pay to play. My personal opinion, I mean, I think a private exchange can do whatever they want, but it's good to get this information out there so people don't think that they're something other than what they are. And so, Joe, you've actually, through DigiByte, you've had some personal experience with Binance. So you want to go ahead and explain the situation and then talk about your perspective there?
Yeah, I think like you raise an interesting point, right? Like, so they're a private company. They can do whatever the hell they want, really, right? Like, well, within most reason. But I think what struck a chord specifically with us is the not just like the perception, but the whole like, yeah, we're amazing and we are 100% charitable and all of that kind of thing. Whereas if they'd basically just come out and gone, yeah, we're actually just in it for the money, I kind of would have personally gone, I can respect that. I can respect that there are people here for the money, right? Like that's what a lot of people are here for. Good for them. But when you are basically coming to a project, so I don't know too much about Smart Cash and Navcoin if you've had any dealings with them, but when they kind of came to us and they said, well, we'll list you, let's have a chat about it, and then they turn around and basically say, right, let's talk about the listing fees now after we've told you we're going to list you. How big is your wallet? Mm-hmm. And we're kind of like, what do you mean? How big is our wallet? They're like, yeah, how much can you afford to pay? Like I think the exact wording was, our fees are high. So it's kind of it's almost like borderline extortion at that point, where they're going, we're not going to sell you this loaf of bread until you tell us how much you've got in your back pocket there, basically, right? Like if you went to a bakery and they tried to sell you a loaf of bread and tell you the price of it after you'd already gone, I've got $5 in my pocket. They're like, yes, it's $4.50 for this loaf of bread. And you're like, wait, what? that's basically what happened. So I suppose.
Interesting. So they waited to see what like funds were available to scope out what range budget would be.
Yeah, exactly. Like, how much do you have? Like, let's say you've got $1 million in your war chest, right? We want 10 or 15% of that sort of thing. So. And then I suppose the flip side of that is like, that would be great if it was going to a charity that wasn't directly feeding back into both CZ himself, the president of Malta, and also somebody from Unido, I think, who has a rather checkered past. So it raises a lot of red flags there. I would rather see it go straight to maybe like a pre-existing charity that already has a solid track record or something like that, like Tier Fund maybe, or World Vision, something like that, right?
I mean, it's really hard to find charities that use funds really wisely, to be honest. Like, I can understand the impetus of wanting to create your own foundation so you can directly control funds like the Naomi Brockwell Foundation. And, I give directly to the Free State Project and give directly, to things that I believe are important. So I understand that side of things. Yeah. It is interesting, though, this idea of having an exchange where it's pay to play. Like, what do we think about that in general? I mean, I think it's fine, and it's a good way to, find out about coins. It definitely, I mean, if they're purporting to be an exchange that has all of the most important coins, where it's actually just pay to play, I think that's a little bit deceptive there. But what are your thoughts on that?
Like, I mean, because so on the top 50 in the market cap, I think there's us, there's Decred, and there's one other proof of work coin. And basically, we're the only three that aren't currently listed because we didn't have like an ICO or a substantial pre-mine. I think the exceptions there's Litecoin and Monero, which they just listed out of their own, kindness of their heart. But maybe I'm thinking now's probably a good chance for Craig or Chris to chime in about.
Yeah, totally. I mean, Navcoin is listed on Binance and Poloniex, and
how much did you pay?
And all these other exchanges as well.
They have NDAs they can't say.
We didn't launch with a pre-mine or a ICO or anything like that either. So we've had to deal with this whole exchange listing thing, and back in the day it wasn't a problem. Places would just list you because you're a decentralized coin, and that's what they were there to service. Mm-hmm. Over the last 18 months, it really has clearly, not just with Binance, but with all the exchanges, really just become a money grab to extract cash out of these over monetized ICOs. Mm-hmm. And, I think it's really interesting because it opens up the wider conversation about this practice, I think. And one of the things is that these exchanges are trying to charge these fees, but then they don't actually offer any type of service agreement to back that up, right? They just say, pay us some money, we'll put you on. They could delist you in a month and you don't know, and you've just paid $500,000 or however much they're charging these days.
They just did with Bitcoin.
Yeah.
Oh, really? Did that happen? Wow.
They've been in there for less than 6 months.
Yep.
Yeah, and I mean, in a lot of ways, these these service agreements don't make sense for a decentralized project, right? Because who's entering the agreement? Even though I'm a co-founder of Navcoin, I don't speak for the whole network. I don't own or control it. So I can't even enter into a service agreement with one of these exchanges. And if I did, I'd actually be admitting that I do have control over the network, and that would make Navcoin considered a security. And that would disqualify me from being on the exchange because they can't trade securities. So it becomes a circular dependency where it just makes no sense at all. So I think exchange listing fees are a complete farce, and I don't think they should exist. They should list projects based on their merit, and there should be some type of check and balance around that somehow.
Yeah.
And exchanges do have overhead involved with listing coins, but
absolutely,
that's kind of what the trading fees are for, from my perspective. I mean, right? I mean, if everybody is paying, then
it is interesting that they can have whatever business model they want. As we said before, we kind of established, they could do what they want in terms of finding innovative ways to make their money. Ultimately, I see this as not a bad thing at all. And I think everything is going to be geared towards decentralized exchanges. I think that the overhead that does extract fees or money for listing, all of that, when we have other options, when we have decentralized exchanges, that's friction that people don't want to have to deal with. So they are just going to go to the decentralized one. I honestly think that's the future, and we're going to see a lot of these exchanges just die out.
Well, right now, the exchanges, the way they're charging things, it's the same way that Walmart will charge for end cap advertisement. They're selling your product, but you're paying them to position your product. I mean, it's the same concept. It's the same traditional business model. And it's just, all about making money. And as has already been brought up, the ICOs really enabled this, because the ICOs were basically printing all their own dollars and were able to pay whatever.
And we literally enabled the ICOs.
And the ICOs, they could sell Ethereum to get the USD to pay Binance or whatever without devaluing their own token. Whereas, those of us who didn't do ICOs to get those dollars have to sell our own currency and potentially devalue our own currency to get that $3 million Binance fee.
Yeah. No,
were you quoted 3 million?
I'm not saying anything about what we're not quoting. Because again,
that's the hard part. There's the NDAs, right?
Yeah, Binance will refuse to talk to you, and if you talked about your listing process before they do, they will stop the listing process.
And on the CoinDesk article, if we want to go like what estimates are, it does say here that an analysis firm suggested that projects could pay anywhere between $1 million and $3 million for addition to the major trading platforms. So that's huge.
Yeah,
sorry, you go, Chris.
No, I'm just saying there's lists going around about what all the various top exchanges charge to be listed, and some of them are more reasonable in the 5 to 10 Bitcoin range, and Binance is at the top of that list of a lot of money. What any individual coins are charged or not, it's I have no idea how those negotiations go. As it sounded like, well, how much do you have is the answer for how much it costs, which is a horrible way to do things. Well, it should cost you a certain amount, right? It's not a matter of if I have more money, it costs you more. But again,
from their means to each. Right?
I think the most extortionate one I've ever heard was 20% of total supply.
And again, the ICOs are like, fine, we'll just give you 20% of our tokens. It doesn't matter.
Yeah, like they can do it, right? Like, especially if you've got 50% yourself, or maybe you've got 100% that you've sold off 10% already. If somebody comes to you and they say, right, give us 20%, but your price, like if you look at, say, for example, I think it was Tron, they went up 5x or something. If you're giving away 20%, then it's smart business sense for you to do so.
Yeah,
but it's
at least in the short term.
Yeah, right. I mean, I'm quite heavily involved with a lot of listing processes and stuff like that with a bunch of other exchanges. And some of the major ones are asking still anywhere from between half a Bitcoin just for BTC to, in our case, Digibyte peering. It might be an extra Bitcoin on top for a USD peering. That obviously doesn't help when we still don't even have half a Bitcoin to give to them. And so they get into arguments with us like, would it help if you were able to pay it in your native token or in Bitcoin? It's like, no, we don't have the money. Like, it doesn't matter what you want me to pay you in, I still can't pay you. But then there's others that are like, yeah, $500,000 for just a standard listing. And it's like, these are newly launched exchanges that have zero liquidity and no people on them. Like, why would you want to pay for that when there's nobody on this fresh exchange, right? Like,
but I mean, I'm super excited about the future. I'm super excited about us having options out there. That's the great thing about this space, is that we have figured out how to distribute trust, how to decentralize things.
Yeah.
And when you have shitty companies, you know, whether they're just doing what's in their best interest, which is great, whether they're actually hurting people, or whether you just don't like what they're doing and you want other options, it's great that we now have other options. So super pumped to see what happens in the next 5 years in terms of exchanges. It seems that all the conferences I go to, and I know that like Craig, I was with you at Blockchain South in New Zealand, and there was a lot of talk there about decentralized exchanges and some sort of hybrid model as well. It just seems super exciting to me. So I'm pumped to see those ones get better and have less friction there. But let's
seems like the future though, like especially with things like Blocknet already being there, and they've been around for a year. We've been doing atomic swaps on Blocknet now, like Digibyte to Litecoin, for example. Happens instantly. It's incredible through the Blocknet, and it's available.
There's some awesome ones out there. And you've got Komodo that does the most atomic swaps out of any platform at the moment. It seems really interesting. Lots of really cool projects. Maybe we should do a segment just specifically on the usability of different decentralized exchanges. I know that there's a lot of friction there at the moment. Some of them are just cumbersome and not easy to use right now. So that needs to be addressed. But there are some that are not too bad. So I think it's helpful for people to know that there are options out there. But let's move on. So we mentioned, I think, was it the last show, or actually maybe it was someone else's show I was in. But anyway, recently talking, it was the quiz show. I had a question about this. So Yale was looking into using endowment money, investing it in crypto, and a bunch of other Ivy Leagues have jumped on the bandwagon as well. So let me pull up those words. So we have Harvard, Stanford, MIT. They're all joining Yale in investing in cryptocurrency and crypto-related projects through their substantial endowments. That's kind of interesting, right? Because when I think of Ivy League institutions and colleges like that, I just think like stodgy, backward, old-fashioned, all this, but they're like on the forefront, investing in cryptocurrency. I wonder how the donors feel about this. What are your thoughts?
The donors are probably excited to get in on the ground floor of something like this and getting some exposure to cryptocurrency in this way. I just think it's great news for crypto in that some of the old money is finally recognizing, hey, maybe we need to stop laughing at this and start paying attention to it.
Yeah, I think it's super cool.
And it's interesting to see exactly how they'll end up doing this, whether they'll just go through Coinbase or whether they'll set up their own little trading desks to manage it, or exactly how that will be managed. I'll be excited to see what tools come out here, because I really hope that the crypto space can provide better tools for this sort of things than the traditional investment networks.
Didn't Coinbase just close down your institutional investor thing yesterday as well?
Oh, really?
I mean, if they did, I would have totally missed that.
Yeah, so because I was looking at that, because I was thinking as well, right? Like, so you've got Harvard, Stanford, MIT. That would be great for them to basically go to Coinbase and go, here, just, you know, take the money and you invest it in your index fund. But I also remember, I think it was Samson Moe basically did a short talk at one point saying your best bet is literally to just hold on to Bitcoin compared to all of the other projects that were around back in 2000 and let's say 13, I think he used as the example. Like over the last 5 years, 90% of the projects have died off. And so if you were obviously throwing 10, 20, 30 million dollars into them, whatever, that money is gone. And so his argument was basically just buy Bitcoin.
And the problem is that these tools have to offer more than just holding Bitcoin to be worth the percentage you're paying them.
Yeah, what was the fee? Like 1%, 2% a year or something? And it's like
something like that, which is
Bitcoin yourself.
Bad. Just at the same time, if you're paying them that to hold Bitcoin, what's the point? I can, give you a ledger and you'll have a much better time of it.
Yeah, so that's what you were saying before about Coinbase. So just looked at that up. So they closed the institutional investment funds, and this was just announced this week. I missed that too. So they had an index fund and Coinbase bundle. Basically, the idea was to expose investors and institutional investors to all of the assets listed on the Coinbase exchange. And then that's now been closed. Apparently, they're going to be focusing more on retail. So there we go.
But how cool is that? Like, it's $25 or something, right? And they give you basically your first introduction to, like, how awesome is that? I think that's fantastic. You can go there. Here's $25. I've now got my sliver of whatever cryptocurrencies, and away you go. Like, how awesome is that?
Yeah.
So the head left. That's why they closed at the head of that.
Well, I also think that there's an issue there. So crypto index funds have always fascinated me, but the problem is that we thought before, index fund would be kind of like S&P and you'd be diversified across all these different things. But as we've learned in this bear market, everything is correlated. There's no such thing as saying Bitcoin's going down and this one, over here is doing real. No, they all just like move in sync. And so it's really hard to diversify a portfolio and have an index fund. And it doesn't actually hedge your money in any way at the moment. Maybe as the market matures, there'll be more room for something like that, but it just seems like it's not really workable right now.
Yeah, and at the moment, you're exactly right. And outside of weird news, black swan events, everything moves in time with Bitcoin. But, we are very young in this whole altcoin craze and see where it goes and where the whole free market of currency actually takes us.
Well, like, talking about young, what's the total market cap of all cryptocurrencies? Like 200 billion or something, right? What's Apple computing worth? $1 trillion? Like, Apple could come out with their cash and basically just go, you know what? We're buying everything. All cryptocurrencies, the whole lot. We're buying it all, and we're going to still have change left over. They could do that. We're tiny. This is still early adopter level right here. It's great.
Yeah. Yeah. Let's move on. We've got some fun news that, well, not really fun, just kind of bewildering. I'm like, what's going on? So Russian crypto exchange YoBit advertises pump schemes. They're just very open about that. They tweet out YoBit pump in 22 hours. We will buy one random coin for 1 BTC every 1 to 2 minutes, 10 times. So the total amount, 10 BTC. And it's like, when people do that, it's generally discreet because it's pretty frowned upon to do pump and dump schemes. That's why they're called schemes. And they're just going out there saying, yep, we're going to do this. A lot of people thought that maybe like their Twitter had been hacked, but then it was confirmed that there were company emails sent out along these lines as well. So clearly this is not a hack. This is a thing going on. So what do you guys think about that?
There was a countdown timer on their website as well, right?
Does they really?
Yeah, it was absolutely insane, right? This has definitely raised a few eyebrows. At the very least, it's tantamount to insider trading, right? And the regulators have to be watching this unfold and just laughing. I mean, it's a Russian exchange, so it is somewhat outside of the grips of the SEC. But as far as I'm aware, they have US-based customers, so they're still technically liable to.
It's very good pump and dump scheme. Come on, you make big buck. No, it's like fascinating because you have a lot of these scams going on, right? And generally the idea is that you discreetly push this and then you announce it so that then as soon as it reaches the top, you sell, right? So that it's not this open thing. But they're literally saying, so here's our timeline. This is when we're going to be purchasing. It's,
and it
I don't
could
know.
be anything.
It's pretty funny, and so there's been like some people have fought back against this. Like Coinigy tweeted that they plan to delist YoBit from its network of cryptocurrency exchanges because of this, because of just like the negative feedback I received about this. But it's kind of ballsy, right?
At least they're being honest, right? Like I'm looking at what we were talking about before, and I'm looking about this. Like, this is transparent. And they're honest. I disagree with them completely, but I can't fault them on their honesty.
Yeah, and it's YoBit. It's not like anybody has taken them that seriously for a while. So maybe somebody will list some trades and offers for 1 BTC in the hope they can sell their random token for 1 BTC because
So,
somebody made money on it.
Mr. Harry Lasagna says that YoBit has actually been doing this via their troll box for years openly. So this isn't a new thing. They've just kind of gotten more brazen about it, which is kind of interesting. They're like, oh, well, we can reach more people if we just tweet about it openly.
One of the main concerns I heard, in comments online and stuff, I have, it's completely unsubstantiated, but was that a lot of people were concerned that it might be a signal that they're going to exit scam or something like that, right? Trying to lure people into the deposit funds to get involved in this pump and dump and then close the gates. As I said, I don't think that's been proven to be true or substantiated at all, but it was definitely something that was rattling around in the comment sections on Reddit and stuff like that.
Yeah, it's people are either in disbelief or they're amused or they're outraged. But it's kind of interesting.
That's hilarious.
Yeah. Let's move on. So we all know Amir Taaki. Now, apparently he's working with people in Syria. The idea is that war-torn Syria will use cryptocurrency to power an anarchist state. The idea being that, currently there are people in Syria who really dislike the state, who are fighting against the state. There's a huge war going on. Amir Taaki has been fighting there for the last 2 years on the front lines, helping these people out. And now they're saying, well, because the state currency there is intrinsically linked to the state, maybe we should be finding monetary alternatives. So they're actually looking into moving over to cryptocurrency, and he's been instrumental in helping that move. So that's really interesting. What do we think about that?
I mean, I love the idea of a currency not tied to the state. I mean, that's what this is all about, right? The proof that we can have a currency that is usable with people to live on day to day, that isn't controlled by your betters in Washington or London or wherever.
The idea of not only separating, religion and state, separating money and state, because it's just so corrupt when the two are tied. I think that's super exciting. So is it pronounced Rojava? Maybe someone in the comments can help me there. Rojava.
Yeah, I don't honestly know much about the Democratic Federation of Northern Syria. I'm not going to say whether they're the good guys or the bad guys in this. As far as most things in Syria, most of the people are bad guys, as far as I've been able to tell.
Well, according to mainstream media, I mean, isn't that all you hear? But Amir Taaki's been working, fighting alongside Rojava in the war. And so that's interesting. And he says that it's a revolutionary project that wants to build a new society based on anarchist principles. That means law, defense, society, and culture. So it sounds super interesting to me.
Does it matter, though, if they use an existing project versus try and create their own? Or are we going to have a similar sort of thing to what we're seeing in Venezuela with the Pedro coin trying to basically start their own and give something value to give themselves value? Or is it going to be like, let's all use Litecoin now or something?
Well, in the article, they were talking about they were kind of rallying a call to arms for revolutionary developers to join them and help them build something, I believe. So it sounds like they want to start their own thing. But of course, that sounds great in theory, and this whole thing sounds really like a libertarian's wet dream. Autonomous, self-governing communes and all the stuff running on blockchain and cryptocurrency. It sounds awesome, but I just don't think the tech's quite there yet. And if they do start up their own cryptocurrency, we could fork Navcoin or Digibyte's source code tomorrow, or Smart Cash as well. And we could start them up with a new cryptocurrency. But we're always going to come back to this problem of early adopters have the lion's share of the distribution, right? So I think before we get to this orgasmic kind of state of egalitarianism and anarchy between everyone, we really have to, as a community, solve the distribution problem. And whether it's proof of work, proof of stake, they're all kind of oligarchical at this point. So I don't see any society being able to transition to this way of living until we really have a fairer distribution model in cryptocurrency as a whole, whatever that ends up being.
And one of those things, time does help with that. I mean, you can look at the different blockchains and see how the distribution is spreading out or consolidating depending on the nature of the crypto and the nature of the people who are interested in it. And that could be, most of the other currencies, if you look at how, the Petro, for example, or any actual currency in existence now has come into being, it usually was traded for something that already existed. So, our current US dollar was traded for the gold-backed dollar back in the day, or for the gold when the US government seized the gold back in the 19 teens. Or, the British pound, that was over the centuries. I was reading a good book the other day, Good Money, talking about how that whole came into being and how there was private money for years and that had prompted the minting. And this whole cryptocurrency thing is a new experiment of making money out of nothing with nothing that it came from. Bitcoin wasn't exchanged for anything initially. It was just Bitcoin. There was no, hey, for every dollar you have, I'll give you 500 Bitcoin. We're not, no, everybody walking in and trading everything out. And that's why the distribution method, because the people who were involved in Bitcoin for the first few years, or the people involved with any cryptocurrency at the start, well, yeah, they were the interested people. They got the mining rewards. They got everything. So I think that as time goes on, we'll see the ones that are actually being used as a medium of exchange will get more distributed away from the founders or the oldest whales into people actually using them. And that just may be a time and adoption and gradual process versus finding a whole new system that somehow fixes that problem from the start.
And the book that Chris referenced is by George Selgin. For anyone interested, it's actually on my bookshelf up there. Highly recommended. It sort of talks about like government-controlled money and the problems with that, and then private alternatives throughout history that have come along and provided better things. Kind of like a parable for Bitcoin coming along and solving a lot of the issues we've had in money. So highly recommend that one. But it is interesting. I mean, when you talk about new currencies being created that are tied to geographical locations as well, that's always a little strange to me, because digital money doesn't need like a physical presence, so to be tied geographically seems unnecessary. Like, when I think about like the petro, just terrible coin there, but like, coins that when they say, oh, this is going to be the digital version of America's money, like for me the whole point of cryptocurrency is to transcend those boundaries, to cross borders that are often created arbitrarily. So it does seem like, God, it's so loud out there. I'm so sorry, guys. There's just like screaming and honking, and I'll turn my mic off. You guys go ahead.
Like, I'm pretty sure one of the because if I remember rightly, Smart Cash also provided a proposal to David Hay for his crypto Kugara project. Was that right? Do you know anything about that?
That proposal didn't end up passing, but yeah, we worked with David Hay a little bit down at Crypto Caracas, and I think tied in with that. Actually, sorry, go on. I was going to go off on my own spiel there. Please continue your thought.
Yeah, I think like, would it not be better if you let's say that you are these people in Syria? Why would you not take something that already has value and has like, people using it? You've got the infrastructure there. Why not just simply start with something like that? Why not take Smart Cash, Navcoin, Digibyte? Why not just start using that rather than trying to literally build your own from the ground up? It seems like almost like a selfish way for a select few people who are involved with it in order for them to get rich. Can they then fund additional war off of that? Like, is that, I don't know.
I agree with that concept. If you're going to start your own new libertarian society, why not use something that has established that you're not in control of to, from the start, separate the government from the currency?
And I'm also not sure that they are implementing their own currency. It just says here that they want to spread cryptocurrency in the region, have people accept a cryptocurrency, but they are talking about like governance on blockchain. They're talking about a whole bunch of things on blockchain so that they don't need an actual state presence there. So maybe that is why, maybe because there are certain people with, somewhat homogenous ideals fighting for a certain principle, maybe that's enough to consolidate people around a project. And maybe that would be a reason for like a physical coin. I don't know.
Yeah.
One of the hardest things that you're going to deal with is even using an existing cryptocurrency is really the on-ramp, right? They've got all of these Lira or whatever they've got, and they've got no infrastructure. Their whole country's just been blown up, and they're really trying to go from 0 to 100 real fast. Turn from a war-ravaged area that's just been completely demolished to this sort of decentralized utopia running on blockchain and cryptocurrency. I think it's awesome. It's super ambitious, and if they don't start their own thing, then they're going to have to set up all of this infrastructure and somehow convert their existing wealth into existing digital tokens. Which is going to be pretty hard.
And a lot of the research being conducted is actually into projects that don't rely on the internet, as you've all said. The infrastructure there just isn't. It's not equipped to handle cryptocurrency as we know it. So they're looking into solutions that can be transmitted over radio, paper-based currencies pegged to crypto. So they're sort of adapting to their physical, their context there, and all of the hindrances that they're having to deal with at the moment. I don't know whether having a paperback currency that's pegged to something is a good idea. Chris is shaking his head no, this is terrible.
Yeah, I would not even begin to imagine what a paper, no, just don't do it.
Well, then you have fractional reserve banking and all of that. You start to open the gates for devaluing the currency, because you could have a certain number of paper things backed by an actual digital token that people could just print more, which is what we're seeing at the moment, which is why we want to get away from the state system. You could have institutions that lend it out, but they lend out more paper than they actually have the backing of. Yeah, it does seem problematic. But I don't know what the alternative is. If they don't have access to internet, then maybe the radio-based one is the way that they can go. But I don't think you need a specific cryptocurrency for that. You can currently exchange all kinds of different currencies. In fact, all currencies without the internet. And you use devices like GoTenna has released their analog device that uses radio waves that enables you to buy and sell cryptocurrency and exchange it. So it is interesting, and I wonder if they're looking at those sort of tools more than this article is reporting.
Yeah, and they are the people on the ground. I have no idea what they're really trying to overcome there. And I do like the concept of revolutionary hackers. That I love that turn of phrase. I hope that they are very successful in what they're trying to do, and it'll be very worthwhile watching to see the struggles they take over, because for a lot of the world, people still use cash. People still like cash. India tried to remove a whole bunch of cash, and that failed miserably for them. So having solutions that can be used in place of cash when you don't have an internet connection or you don't have your phone is something that is important, and being able to have that solution for people. So it'd be worthwhile watching.
Yeah, for sure. Let's move on, talk about the US Customs Agency that hopes to evaluate a blockchain pilot by December. You've seen that in a lot of different places, people wanting shipping, supply chains mapped on a blockchain as a way of keeping track of things, as a way of having immutable records, especially when they have issues with accountability and that sort of thing. So it is interesting. The government, whenever they sort of get involved with this stuff, I can't help but think blockchain is inefficient enough. We don't want the government to start making it more so. But it is interesting, and again, I like to see blockchain be applied to more things, because it is a way of decentralizing trust. But if it's just this private blockchain that they're using, I just wonder what help that will be to them. Anyone looked into this and the pilot program that's been I'm
just reading the article now. I might just give them a call and just say, hey guys, why don't you use DigiSign and just save you having to do all the development. We've got the stuff there. It's all done.
Well, because then they won't get to spend money, and then they'll have to cut back their budget if they can't say
you can't make the government more efficient.
Right.
This is just the government version of blockchain iced tea.
Yeah.
When I looked into this, the customs agency, they're intentionally vague on the technology. They really didn't go into what they were using.
Oh, really?
A couple articles deep when I was reading about it, they explicitly denied that they were working with IBM though. So it's not Hyperledger, I guess.
Interesting.
The Department of Homeland Security in June awarded Factom $200K to secure some border patrol data like imagery and sensor information. So there's some speculation as to whether they're using Factom's blockchain in some way. But yeah, they've been totally not transparent at all about what they're actually using. It's really hard to say whether what they're doing is going to be useful or not, because there's just no information, unfortunately.
Right. And I wonder if they'll be even awarded a bit license in New York. You'd have to have some sort of like en route to government to get one of those. Oh no, they probably will. It's all right.
I don't know. New York doesn't like the federal government right now. Maybe there'll be some interdepartmental warfare going on there.
Maybe New York will break away from America and just become the shittiest country in the world. As someone who lives here, like, oh my gosh, like Uber. So just going off blockchain for a little bit, after they capped the number of Uber drivers it allowed in New York City, I cannot get an Uber anymore. The number of times I've been stranded in the rain, like I remember visiting this city 10, 15 years ago and being like, this is terrible. There are no taxis. They're all going past me. It's all at the changeover time of shifts. You know, no one wants to pick up passengers. It was terrible. You'd be in the rain for like an hour. And now in 2018, we're back there because the government decided to cut the number of Ubers, thereby getting rid of all of this wonderful solution that the private sector came up with when there were no vehicles available for people. So that's just a side note. Let's get back to blockchain. I just needed to get that out of my system.
So if Uber was open source, you could fork Uber and do Uber 1.1 on a different, you know, right? And then we could just have a whole bunch of Ubers that basically all go back to the same place. Wouldn't that be great?
Well, people are looking at decentralized ride-sharing apps based on blockchain, and I am very excited about that. And as soon as it happens, you guys will be the first to hear about it because I will be jumping for joy and I will become their personal ambassador. So yeah, I mean, it is interesting. Like you always hear things about government getting involved in researching this side of blockchain to apply it to this. They're notoriously slow moving. So by the time they implement this, we'll probably be on like blockchain 10.0. And whatever they're working on will be obsolete. But it is interesting to see them sort of going that route. And I'll let you guys know what ends up happening there. Let's move on. So Liquid goes live. Blockstream's first Bitcoin side chain has just been made live. So that's interesting. I know that I think it was Andy in the comments was saying like, I hate it. It's centralized and it's not useful and all of that. So I'd love to hear in the chat what you guys think of this as well. But if you guys wanted to go ahead and just give us an overview of what Liquid is and what they're trying to implement there.
Yeah, I'll jump in here. I put forward this one, I guess. So Blockstream, of course, is a company that was set up by some of the Bitcoin core developers in 2014, and they've been working on this sidechain project since 2015, and it's no easy thing to solve. They're basically trying to do what's called digital alchemy, where you can kind of transmute tokens from one chain to another and have it accountable and trustable across these two chains. So the reason why they're trying to work on this is to allow this kind of fungibility between these chains and provide liquidity between exchanges, where you don't have to wait for your Bitcoin to confirm between exchanges. You can kind of use a middleman to transfer it from one to the other, and it can happen sort of fast, and you can trust that you can get these Bitcoin out of escrow when and where you need them. So it's a really interesting project. They've been working on it for 3 years, and they finally released it. They have managed to sign up companies which generate over half the world's Bitcoin volume to implement this. So, you know, it's a pretty big piece of news. And the only real drawback, as someone in your comment section said, is that they were aiming to make it fully public and sort of decentralized, but they have launched it as a federated chain. So a lot of people criticizing that, I guess. It's validated by that. I mean, it's validated by the consortium of companies who engage in the project rather than public miners.
So in general, you're optimistic about this, and you think that this is a good step forward?
Well, Blockstream is like probably the leading blockchain research and development company that's been doing this for the longest time with a lot of smart people. I think that it's a good step in the right direction. They make some pretty interesting claims. The CSO said that they think that it's better for launching tokens on the sidechain than the Ethereum network. And yeah, they've got a lot of buy-in from people in the industry. So I don't know, I'm always dubious of anything that's not a properly decentralized and properly publicly mined blockchain, because they're always open to sort of corruption and coercion. So we'll just have to see how it plays out. I'm sort of tentatively hopeful. I think that at the least, they've come up with some really interesting tech under the hood that's gonna, come out of their lab and hopefully start infiltrating into some other projects and make some bigger waves throughout the wider industry.
So if
I
this
think like
sorry, go ahead, Joe.
I think provided that they're open, let's blame the delay, the latency going from.
Absolutely, I'm
New
sitting here
Zealand
with my mouth closed.
Why like if they're open about this, basically saying this is a second layer solution, it is centralized between these exchanges and things like that, right? It's not going to solve Bitcoin's scaling problem. If they're open and like straight up about that, then I think that's actually totally cool. There's absolutely nothing wrong with a company and a consortium of companies building their own stuff on top of a blockchain in a way that's going to benefit them. I think that's fantastic. I'm all for additional projects, additional use cases, and all that sort of thing. But what I have seen is people basically going, this has now solved the scaling problem for Bitcoin. And that's not true at all. So provided people actually understand what's going on here and know that this is not magically going to mean that you can do 1 million transactions per second on Bitcoin, then that's totally cool. But already I've seen people going, this is it, we don't need Lightning anymore. I'm like, wait.
They don't even have Lightning and they're already moving on.
I know, right? So it's, but that, in saying that, if there's a group, and I'm looking at this list of exchanges, there's maybe like 24 in there. If they want to come together and agree that based on X, Y, and Z, we now all communicate and collaborate and, share value between us and things like that, that's fantastic. Good for them. And, I think provided they're actually just being straight up with people about it, then, this is awesome and good job for Blockstream.
So if this is a vehicle for launching tokens on the Bitcoin blockchain, which is kind of what I'm getting from this, are we going to see like ICOs 2.0?
Well, it's not quite launching tokens on the Bitcoin blockchain.
Okay, all right. I was getting a little scared there.
You can effectively transmute your Bitcoin into liquid and therefore kind of use it like Bitcoin becomes like Ethereum to purchase these side tokens on liquid. Totally making wide assumptions there, but that's sort of what I gather from what I read and the sort of analogy that you're trying to make there. But I don't know. I think because it's supposed to be sort of more between corporate entities, it's hopefully limited. I don't think these guys set out to make Ethereum 2.0 and cause another crazy ICO pump. But I don't know. What do you guys think?
Well, it seems to be
cause another ICO pump. I think we're kind of past that in the stage of things right now, at least until something big changes.
Well, it's a tough one because I'm really keen to see like the shitty projects fall by the wayside. Mm-hmm. But at the same time, I think the whole ICO method is absolutely fantastic way of kickstarting a valid project. So I'm torn in that respect.
Absolutely. I just, I would see it as more of a sane approach versus the insanity we had for 18 months there or whatever it was.
I have too much money from my coin mooning and I've got to put it all into these shitty projects. It's like, so I can't remember who tweeted it the other day. Maybe it was Peter Todd, I don't remember, but someone was saying, oh, well, you should always just put a little bit into a bunch of different things. One of them could go through the roof. And they were saying no, because if you put a little bit of money into 100 shitty projects, you've just lost all of your money. Yeah. So it does pay to be a bit more discerning there. So I do think that the market has gotten a lot smarter. And especially because we've been in a bear market, and maybe I'm just overly optimistic and I'm just hoping the market has gotten smarter. But I mean, I think the ICO vehicle is great. I see that the IPO vehicle was just this awful bureaucratic gummed up network that no one could enter, that had huge barriers to entry and the average person couldn't participate in. And so it was a very unfair system that really just, contributed to people in the know and people connected being able to leverage the traditional financial infrastructure and other people not being able to play a part. And so I love the idea of ICOs. I love the idea of people being able to buy in and own a small percentage of a company. You go to a pizza shop, you like the pizza there that you could potentially like buy a portion of the pizza shop, I think is awesome. And I do think that because we just had that first wave, we just got way overhyped and people not realizing the risks involved with this and the dangers of all the scams that could come out of this, and also we've got to figure out, you know, what perverse incentive structures come into play when you're given all of your money up front before you've actually built a product. So perhaps ICOs can become a vehicle for an existing pizza shop that already exists, and you want to buy a portion of it, rather than let's give us you know, let's give us some money right up front, and then we may or may not build the product down the road. So it has pros and cons.
Well, that was a hot topic at the Blockchain South conference that BNC put on, right? They were going on about STOs, security token offerings. And I think it's just really, we need to create those clear divisions between and definitions between these financial products so that people understand what they're getting, right? Like, is it a utility token? Am I purchasing something that allows me to pay for play on their network? Or is it a coin? Is it a currency? Or is this actually something which is considered a company stock? And should I be getting a return and have investor rights and all these other things? And at this point, those things are all blurred together. And I think as this industry matures, yeah, obviously raising funds through blockchain and distributed ledger technology is awesome, but we just need to make sure that people know what they're getting into, and people, if it is to fund a company to build their product, that they're eyes wide open and aware about that, and that they have the same sort of consumer protections that they should have, and they don't just get fleeced and, you know, people run away with their money.
Like, so that's really interesting. I was talking with a gentleman from it was actually just yesterday, from Brave New Coin in the city here in Auckland as well, and he basically said that if he wanted to buy shares in something, like if he wanted to buy shares in Apple, he's like, how do I do it? Where do I start? Where would I begin? Who do I have to pay the fees to? But he basically then turned around and said, look, for the ICOs and things, this has been fantastic, because you can jump online, you can swipe your credit card or whatever, and you can pay for, you know, whatever you want, basically. All that sort of jazz, you can pay for it with Bitcoin, and the worldwide borders basically disappear, and the ease of getting into it also, you know, significantly improves. So I'm kind of excited in that respect for ICOs, and like you say, to be able to go, you know what, that pizza place was freaking awesome. I love their pizza. I would like to buy a share in the pizza joint, right? So yeah, but the lines, like you mentioned, are just way too blurred right now.
Right. Well, we've run out of time on the show today, and the chat is now devolving into a fight about Ripple, which is always nice. And Mr. Harry Lasagna says, if I could punch Ripple in the face, I would have already, which is a fair comment. But let's have a debate about Ripple some other time. I think that could be very interesting. Would any of you guys be game to go there?
Yes.
Absolutely.
Absolutely. All right, let's do this. So coming soon to this channel, a live debate about Ripple. We'll have some people pro, some people against, and we will hash this out. Zing. And also, I just want to say huge congratulations to Chris. So you guys may not know, but Chris just had a baby. Yay! It wasn't him who technically had the baby, but it is his child. So very exciting for him, and so happy that you joined us here. I know you must be sleep deprived. God, that's loud. Stop it. This is an important announcement. So I'm really happy that you are here with us, even though you're on very little sleep, because we love having you on the show, just sharing your wisdom. So congratulations. And thank you so much to everyone in the chat who's there. You guys are so awesome. I know a lot of you just came over from the Talking With interview with Andrew Hales. So I really appreciate you being here and being part of this community. And I hope that you like it. And thanks to you guys for being here chatting with me today. It's been really, really wonderful having the two of you, Joe and Craig, just joining me for the first time, and I hope to have you back.
No problem.
And that's all the thank yous that I have, and it's been a lot of fun, and that's all the time we have for you. So go and have a wonderful weekend, everyone, and go and have some tea, and then have a fun night, whether it's filled with dancing or work or films or whatever shenanigans you have.
Thanks very much for having us on the show. It's been a pleasure.
Bye.
Thank you.
Sayonara.